নমস্কার, আমি তুহিন। আপনারা দেখছেন ইন্দো বাংলা টাইমস বিজনেস টিভি। আজ অ্যালাইড ব্লেন্ডার্স ডিস্টিলার তাদের আইপিও প্রকাশ করেছে। অ্যালাইড ব্লেন্ডার্স ডিস্টিলার ভারতের মাটিতে বিদেশি অ্যালকোহল তৈরি করে থাকে এবং এটি ভারতের বৃহত্তম মালিকাধীন বিদেশি অ্যালকোহল তৈরি কোম্পানি। এরা 5 ধরনের অ্যালকোহল ভারতের মাটিতে তৈরি করে থাকে। এদের মধ্যে হলো উইস্কি, ব্র্যান্ডি, রাম, ভোদকা এবং জিন। আজকের এই সাংবাদিক সম্মেলনে এনারা তাদের মার্কেট স্ট্র্যাটেজি, রেভিনিউ এবং এরা ব্যবসায় কি কি পরিকল্পনা রয়েছে এবং তারা কোথায় কোথায় তাদের প্রোডাক্ট ম্যানুফ্যাকচার করতে চলেছে সামনের সময়ে এবং ভবিষ্যতে তাদের ব্যবসায় কি কি উন্নতগত পরিকল্পনা রয়েছে, এই সকল বিষয় নিয়ে আলোচনা করেছে। এই সকল তথ্যগুলো একজন ব্যবসায়ী হলে আপনাদের জন্য অবশ্যই গুরুত্বপূর্ণ হতে পারে এবং সাধারণ মানুষের জন্য এটি একটি গুরুত্বপূর্ণ তথ্য। তাই আমরা আপনাদের সরাসরি দেখাবো আজকের সাংবাদিক সম্মেলনটি।
For the fiscal FY23. ABD's flagship brands, Officer's Choice was launched way back in 1988, and since then, it has only consolidated 16 major brands across the whiskey, brandy, rum, and vodka categories. Certain brands, very well-known brands, which you may have heard of this many times earlier: Officer's Choice Whiskey, Sterling Reserve, Officer's Choice Blue, and Iconic Whiskey. They're all millionaire brands. So the company has 4 millionaire brands in the portfolio. ABD also owns and operates a distillery which is located at Rangapur in Telangana, and it manufactures ENA, that is extra neutral alcohol, which is the raw material for the company. It has a capacity of 60 million liters per year. It also has an extensive bottling capability across the country. Over the years, the company's business has generated healthy operating cash flows despite impact of COVID-19, which severely impact any consumer industry or any consumer business. ABD's net cash generated from operations was 229.8 crore for the fiscal FY23 and 143 crore for the 9 months ending December 23. The revenue from operations for the fiscal 23 was 7,105 crores, whereas for the 9 months ending 31st December, the revenue was 5,911 crores. Let me introduce you to the senior management team of the company, which is dignitaries on the dais. Let me start off with Mr. Shekhar Ramamurthy, who is a whole-time director and is also the executive deputy chairman of the company. He has been instrumental in implementing strategic business initiatives and focusing on identifying opportunities of growth and value for the company of overall experience. Next to him is my pleasure to introduce Mr. Alok Gupta, who is the managing director of the company. He focuses on the business growth initiatives, including the premiumization of the portfolio and distribution of brands in the premium segment. He holds a postgraduate diploma in business management from IMT Ghaziabad, and prior to joining ABD, he was associated with multiple companies including McDowell's, White & McKay, United Spirits, amongst others. Let me also introduce you to Mr. Ramakrishna Ramaswamy, who is the Chief Financial Officer and the anchor man in the company for the last 14 years. He joined the company in 2010. He has extensive experience in finance. He holds a bachelor degree from University of Bombay. We also have Mr. J. Mukund, who is the Head of IR and Chief Risk Officer of the company. He is a graduate from University of Delhi and postgraduate in Diploma in Business Management from ICFI, Hyderabad. His earlier association has been with Reliance Communication and Raymond's Limited. Now turning to the IPO. The IPO consists of 1,000 crore of a primary issue and an OFS of 500. So the issue size IPO is a 1,500 crores, of which 1,000 crore is a primary issuance into the company. 500 is a OFS by selling shareholders. The price band that has been arrived at is 267 on the lower end and 281 on the higher end of the band. This is per share price, and the face value of the share is 2 rupees. The issue opens on 25th of June and closes on 27th of June. The anchor will be on 24th, and we'll share the list of the anchor investors on 24th evening. So looking forward, and I would now invite Mr. Alok Gupta to please take us through the presentation. Thank you.
slide that you see on the screen is all about where the journey started. So ABD's journey started in 1988. It's been 35 years. We are in the business of brand, and the 4 brands that you see on the screen are our 4 millionaire brands. The journey in 1988 started with Officer's Choice, which continues to be our flagship brand. It was an interesting time way back in 1988 because there were very large recognizable brands like Bagpipe, Director Specials, and many other. And for Officer's Choice to have come a long way in the last 35 years and maintain its market leadership is true testimony to the quality of work that has been done on the brand. I think the liquid inside the bottle, and I'll cover it up as we move forward. So way back in 1988, the journey started with a single brand. Well, in today's world, it was like a startup, right? Because you had established players like Shaw Wallace and Mohan Meakin and McDowell's. So if you were to sort of bring it down to the current context, ABD way back in 1988 was a startup, and today what it is a leading player and the 3rd largest player in the country. The premiumization journey started back in 2011 with Officer's Choice Blue. The major breakthrough then in 2018 with the launch of Sterling Reserve, and of course then in November of 22 with Iconic. And why this is important is extremely notable. If you see within the whiskey segment, there have hardly been any launches, right? If you look at the competitor set, the leading brands have been there for the last 25 years. For ABD, both Sterling Reserve and Iconic are 5-year young. So 2018 is when Sterling Reserve was launched, and 22 is when Iconic was launched. Sterling Reserve already does near 5 million cases. Iconic is the fastest growing brand in the world. It did its million cases in the first 13 months and went on to do over 2 million cases last financial year and continues to stay buoyant. It's a testimony to the brand. It's testimony to the liquid. It's testimony to the whiskey that we make. So that really gets us to be the 3rd largest player with an overall market share of 8%. Over the last 35 years, what ABD has been able to build is a sustainable and a scalable infrastructure when it comes to manufacturing, and I'll show you a slide that will illustrate. We have a pan-India presence. We have 32 manufacturing units, including a distillery at Rangapur. As you all know that in our business, you have to produce locally and sell locally. That's the only way to make money. So having a pan-India presence across all states is extremely important because you're able to produce locally and sell locally. But having said that, it is distributed manufacturing. So in terms of compliances, in terms of regulatory environment, again, you have to have the right processes in place so that you can scale the business, right? So 35 years of running this operation as per the regulation, as per the compliances, I think is an important part of the focus. In terms of our distribution coverage, again, over 35 years, we built a very, very solid foundation on our distribution. We cover roughly 90% of the relevant outlets in the country. We cover nearly 77,000 outlets. We have a manufacturing base of 32 bottling plants and 1 distillery. If you look at the brands they have produced to global scale, the fact that we are the largest exporter of IMFL out of India and not just to GCC alone, now we are doing export across many other parts of the world, including a bit into North America, a bit into Singapore. It's a testimony to the fact that everything that is being produced in terms of delivered quality, right? Not just the liquid, but the packaging, but everything that goes along with it is to global standards. Export continues to be a very important and a focused area. We are living in a global world. So our current portfolio, and as we are building the new portfolio, export is going to get a lot of attention. So what did we end with? We ended with about 32 million cases, about 7,100 crores of gross revenue, and a gross margin base of about 37%. I mean, some parts are bound to be repetitive, but they are because they're important. We are a pan-India company with a diversified portfolio. There is strong brand recognition. Officer's Choice has been around for 35 years. Sterling has been around just for 5 years, but has gone on to make 5 million cases, and Iconic being the fastest growing whiskey. Again, it's about the brand recognition. I've already covered the fact that all our units are strategically located. Let me tell you what we mean by that. I think we have to be mindful of the inbound cost and the outbound cost. Logistics does play a very important role in terms of the cost base, and therefore positioning of the unit has to be around in such a way that you can optimize in your logistics costs. For your distillery, it has to be next to a water reservoir or water source that allows to run your manufacturing plants uninterrupted. For example, our distillery in the state of Rangapur, in the state of Telangana at Rangapur, which is also our biggest market, we produce 60 million liters of alcohol and it is running 100% to capacity. So all these little nuances are extremely critical when you're looking at the manufacturing network, you're looking at network optimization, you're looking at scale, you're looking at health and safety, and many other things that go into running a successful distributed manufacturing setup. There are multiple kinds of market, and over the last 20 years or 30 years, we've seen change from there are government market where wholesale is run by the government and wholesale and retail is run by the government, or open market like the state of Maharashtra, and sort of wholesale market is extremely important for any entity, any business entity in this alcobev space to understand the nuances of what does it really take to operate in such markets, right? It starts not just with knowing the regulation, it also starts about what's the price point, how cost cards have to be made, and many other little things that go into it. So, I mean, in short, it's not about running a business in India. It's about running 30 different P&Ls, right? So the amount of rigor that is required to run 30 different P&Ls is what you got to look at. We all know that on back of the socio-economic changes, on back of urbanization, on the back of the fact that there is a greater amount of digitization and greater amount of social access, the premiumization is a trend here to stay. It is not only in the alcobev segment, but we are seeing it cross F&B segment. So for us, having built out the manufacturing infrastructure, having built out the distribution infrastructure, having built out the sales infrastructure, and having a set of 4 million brands, 32 million cases, we just feel that for us, the tailwinds is what we need to look at. It's about getting the future outlook on newer brands in the more high gross margin segment. The journey towards going IPO started obviously many quarters back, and part of the agenda was that how do we prepare ourselves as an organization to ensure that the post-IPO on the compliances, on risk management, on governance, we have best-in-class practices. So we have reconstituted our board. We have 14-member board, 7 independent directors. They come both from India and non-India, and they bring in very diverse and rich experiences which will help us move forward. This is a footprint of our manufacturing. Like I said, we have one distillery, which is in the state of Telangana. We produce 60 million liters of alcohol. That's at 100% capacity. We have 32 bottling units. Important thing to note in our bottling unit is that you run a bottling unit to about 70% capacity because there are seasonality in the business, and also the fact that you need some headroom for any tailwinds. So the way we do our capacity planning on a 3-year rolling basis to make sure that we have enough capacities left either for a tailwind or for the seasonality. Our R&D center is in Aurangabad, really a very, very important part of what we do. The R&D center produces beautiful blends like that of Iconic, that of Sterling Reserve, and many new brands that we plan to launch in the future. It's a team of very, very committed blenders, people who understand the nuances of what goes into a whiskey. I mean, it's the art of blending. There's a bit of science, but a lot of art, and it's got to do with the imagination of the blender in terms of what to offer to the customer, right? So very, very, very important, and sometimes adaptation of a blend to an evolving sort of expectation, whether it's on the mouthfeel, whether it's in the throat, is very, very important. Though I said it earlier, but I cannot but emphasize again that when you run 32 manufacturing unit distributed, it takes a lot in terms of consistently delivering quality, and that is not just package quality, but delivered quality. It is about health and safety practices, making sure that the health and safety practices are robust, to make sure that the training is happening on a continuous basis. So it takes a lot. If you have one single unit, I would imagine life is tough, but now imagine you have 30 units, life is a wee bit tougher. So I think we've been doing it for the last 35 years, and I think that is important. I've covered most of what is in the slide, so I'd like to focus on what is on the right-hand bottom. The industry has its own set of entry barriers, whether it's in terms of understanding of regulation, what does it take to register a label, is the statutory comment right, are they of the right size, it's about how does the dry good move, how do the wet goods move. So there are many nuances, we all know that. in our country. There are many laws that need to be complied with. And it's one thing to launch a brand, it's another thing to scale a brand nationally, right? So there are regulatory environments, there are understanding of what happens in each state. So it's not about understanding what happens in India. So some of them are entry barriers in terms of newer competition coming in. While it's nice to see a lot of interesting work happening in the startup space, but their challenge continues to be that how do we grow? We need access to distribution. And that for us again is because we have pan-India presence. I think it's about just staying focusing and taking advantage of the infrastructure that's got built out over the last 35 years. And I'm using the word again and again that it is both sustainable and scalable. It is required because as we grow, we need to have scale. And as we grow, we need to sustain as well, whether it is on quality, whether it's on compliances, whether it is on the regulatory environment. The slide really talks about what's happening in the alcobev space. I think you sort of all read it, and there are enough reports that are going around on the fact that the alcobev space is likely to grow between 9 and 10%. But when we look at that number, it gives you just half the story. The story is that the alcobev space will grow 10%. But when you start slicing the industry and break it up into what we normally use as premiumization versus the regular rate of industry, I think one fact is quite evident that the rate of the premiumization is about 1.5 times the rate of the growth of the industry. So for those who are focused on the entry level, which is mass premium, which is sort of the first point of a consumer to connect with the brand, which is where we have Officer's Choice, all the way up to premium and luxury product. They are growing at a extremely faster rate versus the entire segment. And I think reasons are all known to us. We are adding about 13 million users of every year in terms of the legal drinking age. There is rapid urbanization, there's access to media, there's access to social landscape, there is a changing socio-cultural environment, acceptability, and I think it's part of consume better theme that is driving the premiumization, and that's something that we'll stay focused on. Part of it I've already covered, but again, what is important is that the journey towards being in the capital market and the thinking around what is that we need to do. It's not just about the business of brand. As you start accessing the markets, you also have to be ready on aspects like corporate governance and elements like CSR. So a lot of work that has happened. I will not read every element of the slide, but needless to say that there has been a focus over now quite some time to make sure that we build the practices that are best in class. There's a lot of focus on process automation. There's a lot of focus on digitizing. For example, our board practice is already digitized, and therefore role of technology in all aspects of business, be it back end, front end, and not just in terms of building brand, will continue to be a driving factor. Again, the purpose of sharing these two slides is that brands, in terms of either their campaigns or in terms of their packaging or in terms of their blend, they all need to come together. I think the brands have been winning accolades over years, so idea is not to walk you through what we've won, but idea is to maybe try and impress you that we've won many of them over a very long period of time. So consistency again is very important. If you look at how we are thinking about, and I know there are limitations in terms of how much I can talk about it, but at least give you a flavor of how we are looking at it. For us, Officer's Choice has been and will continue to be a very important part of our growth strategy and how it's going to drive a better financial KPI. For Officer's Choice, we will continue to stay focused in markets that offer better gross margin, gives us a better return on capital. And we have successfully migrated from a glass platform to using PET, and we've only gained share. I think there's a little bit of method to madness in terms of how that has been done. I get this question a lot, how you do it, and I say magician never reveals its secret, because I don't want my competitors to follow what we've done. But clearly it makes a big difference to the profitability of the brand. So we'll continuously look at the right market. So it's not just volume growth, it's profitable volume growth, and keep the gross margin at the targeted level. We have an incredibly strong P&A whiskey portfolio with Officer's Choice Blue, Iconic, and Sterling Reserve. I think over a period of time, we've been thinking and now successfully build a portfolio which we'll get to see over a period of time, which is a portfolio beyond whiskey, and participate in other growing flavor. You are familiar with Zoya, which is on display. Zoya was launched in December of last year. It's our first product in what we call as a luxury segment. Operates at about a price point of between 1,800 to 2,000 rupees with a significantly different gross margin. Why gin and why not another whiskey? I think the idea was to get out of our comfort zone and do something that we have not done, but very happy with the quality of work, the amount of the warm reception that it got from the trade and from the consumer. Those who are gin lovers, I will urge you to try it. Hopefully you will like it as well. The operating efficiency is an important part of the matrix. So we are looking at what are the other areas in terms of our commodity procurement or other cost centers that we've identified. How do we get better in that space? And there are some incredibly good ideas that the team has come up with, which we'll evaluate and implement on merit. And I think we are getting better, but it's a constantly evolving piece. So continue to stay a student and learn fast in terms of what's happening in what are new ways of doing digital marketing. Going forward, large part of what we have built is organic, with the exception of our distillery that we acquired, and we've been running successfully for 14-15 years. There are many other opportunities, both in terms of the back end and the front end, and the idea is to continuously stay alert and look for opportunities that might come up our way, which helps us drive a better economics, which helps us get shares in the right market, which helps us get share profitably. Again, I will not get into what's on the left-hand side of the screen, just focus on the right-hand side. A bulk of this you already know. So when we talk about premiumization, and specifically when we talk about premium in the luxury segment, we want to do it slightly differently. We want to keep it asset light to the extent possible, and we are using a term that we are internally calling it build and partner. Build refers to brands that are owned by us. The IP is owned by us. Zoya is one such example, which is already launched. However, if we look at experience-driven consumption, the consumer today is looking beyond brands that are known, right? And that's again true for entire F&B, not just for Alcobev. When you and I go out anywhere, we are constantly looking at what's new. Therefore, while recognizable brands, at least on the luxury side, give you instant visibility, but the consumer is saying, show me something new. So our view is that across the globe, there are many brands that are relevant for the Indian market, and can we bring them into India through what we're calling as a partnership model, not a distribution model. And basically, we have a pan-India presence. We have access to the market. We are building a division called Prem Brand, which is focusing only on the premium and luxury side. And therefore, there are quite a few brands that we believe are very, very keen to get into the Indian market, but given the complexity of the market, they're not sure how to approach it, and we could become their partners as far as the India market and hopefully also the travel retail bit. So one unique element of our entire premiumization, especially on the premium and luxury side, is going to be an asset-light approach where we build our own brands, but also leverage our distribution and our sales infrastructure for third-party brands, but do it not as a distributor, but as a brand partner. So I think that really is an important point that I wanted to make. So that sort of brings me to an end of key points that I wanted to bring to your attention about ABD, and allow me to sort of just wrap it up. We've been around since 1988 successfully. We built a pan-India network of sales, distribution, and manufacturing. We built it in a manner that it is scalable and sustainable. We've got 4 millionaire brands in our portfolio. We are now participating in the luxury segment with launch of Zoya, available in state of Haryana and Maharashtra, which are two large markets for the premium gin. Cost efficiency, leveraging scale, making sure the manufacturing is scalable, sustainable, focus on governance practices. So there's a lot on the plate, but I think we're doing reasonably well in terms of what needs to be done. So I will sort of sum it up in terms of what ABD is, what it's planning to do, and quickly sort of move on to the financial slide. I think clearly what you see on the slide is the fact that we've had an EBITDA which is a single digit, mid to high single digit, and we are hoping on back of. So I will not dwell too much into it, but essentially this represents our historical numbers, and the fact that we have a large scalable base. on back of both cost efficiency, focusing on profitable markets and a new portfolio. The idea is to see and turn around some of these financial metrics. So let me just take a pause here and maybe in the Q&A we can get on to specific questions that you might have. So thank you very much for your attention and listening to me. Thanks.
Hi, Shilpa here from CNBC. I wanted to, sort of get an idea on what's the kind of impact that you see currently with the rising raw material prices, whether it's ENA, glass, etc. And at the same time, we've not seen much of an MRP increase from states either. So just wanted to understand the current situation from your front and also in the impact that you would see that having on your margins.
What you're saying. So I think on the ENA, the outlook is that the Q4 prices of last year are likely to sustain, at least for the H1. And they might, barring the impact of logistics, with what's happening in the Red Sea, we do not see any other significant impact on the prices of the raw material. So as far as cost of good is concerned, as from a guidance perspective, those are the two important things that we have taken into our cost of good. Glass we expect to stay fairly flat, and so is sort of paper packaging, which is label and cartons. So that's on the cost of good. Gross margins, I think, for us should expand on back of three things. One is in terms of focus on profitable markets where gross margins are better. As you know that our business is not about margin on a brand, it's about margin in a state for that brand. So idea is to focus on those states. Second is going to be in terms of having hawk-eye on these COGS and see if there's an opportunity, but make sure that there is no increase. And third is in terms of the cost efficiency, which is beyond the realm of just packaging material. So that is sort of guidance that we have in mind and how we see the future in terms of COGS and gross margin.
Right. And if I could just ask one more question in terms of your portfolio expansion. I'm not sure to what extent you'll be able to answer, but you did diversify into gin, and the slide also mentioned you're looking at more premium products, more expansion into these adjacent categories. So I want to understand, how do you see your entire portfolio then looking like if we are to look at a few years down the line? Are you looking at a good mix, or will whiskey continue to be the main driver of growth, or do you see the adjacent ones also giving a significant contribution?
Okay. So I think first an industry fact that 65% of the industry is whiskey, right? And that's been the case for the last 3 decades. So whiskey is the largest driver. And you're right, I'll try and paint a picture for you in terms of what the sort of future outlook is. So when we look at the IWSR data, we are sort of we split the P&A into P&A and premium and luxury, and that is something that I was constantly referring to. We have extremely strong presence in the entry-level mass premium segment through Officer's Choice, with the OC Blue, Iconic, and Sterling Reserve. We again have significant presence in the deluxe to semi-premium whiskeys. But right at the top, premium and luxury, where our portfolio was till December, till the launch of Zoya, we did not have any portfolio there. So larger part of focus from an NPD is going to be in that segment where we've identified a few flavor price combination where we believe we have both right to play and right to win. So, I mean, for now, I think that's my best response, and you'll see in this financial year some of the work in line of what I've just shared with you.
All right, thank you. That's about it.
Thank you so much.
Hello. Yeah, Nilesh Wagela from Business Samachar. One of the answer you said that 65% market is a whiskey. You have diversified. I have seen that you concentrate only on whiskey. Means in your growth strategy also you want to increase your market share. Your sales and this revenue also means more than 90% is from whiskey. So what about rum and means other products? You don't want to promote them?
Most certainly, sir. But we want to focus on the premium and the luxury side. So essentially, we will see interesting brands in that segment. But will they change the salience? Currently, we are 95% whiskey, 5% non-whiskey. It will change maybe by 100, 200 basis points because the larger segment of the business is whiskey, and the focus is really on the P&A and the premium side of the business.
Okay, and you said that you are Pan India distribution network, but in that case also you are concentrating on, means you have only presence in more than 3 states.
No, we are present across all states. There's not a state in the country where we are not present. Right from Jammu and Kashmir down to Kerala, and I think those are some of the larger markets. But from a presence perspective, right from Jammu and Kashmir down to Kerala and Tripura, Arunachal, all the entire Northeast, all the way to Maharashtra, we are present across all markets. There's not a single market we're not present.
And last one, any budget expectation?
Expectation, we are a state subject. So we are a state subject. I think our focus continues to be on state policy, and that really is what it drives us.
Hi, a great journey of 35 years. Congratulations on that.
Could you identify yourself, please?
Yes. This is Lokesh Shastri from MTI News. So, a great journey. And speaking about whiskey, let me speak about Iconic. So, could you elaborate a little bit on Iconic? That's the fastest growing brand of whiskey that you mentioned just now. And so, what is the success factor behind it? What's the reason for success?
Like I said, a magician never reveals its secret. But to the extent, I think the success of Iconic largely is in terms of understanding in a very large deluxe and semi-premium segment what is the need that is the current set of brands are not meeting, and essentially then you build a brand where clearly the consumer is looking for a change. So I think it's not just a brand that's good looking in terms of packaging or has got a good whiskey. All that has been influenced by what the customer is expecting in the segment. So I think it's a very specific consumer insight driven development, both in terms of packaging blend and in terms of communication, and that's what is driving. Second thing, what we've done with Iconic is that I think earlier on in one of the sessions there was a very, very good observation and a correct one, that the price value equation is getting changed, right? I mean, today some of the Indian brands are able to command a price very different from even the foreign brands, and we are seeing premiumization happening across flavor and across segment. So when you look at the deluxe and a semi-premium segment, these are very watertight price segments. So either you're cross-lined to deluxe or you're cross-lined to semi-premium. What we've done interestingly with Iconic is that we placed it in between, and therefore it is able to get significant number of consumers who are happy to move up with a minor premium, and we're able to get significant number of consumers who are happy to try something new and also discover in the process there's a little bit of saving.
Great. Now coming to the IPO, currently what is the debt that is there on your books of accounts?
Current net debt is about 768 crores.
768 crores. And post the IPO, are you planning to repay some of the debt? And also, how will you utilize the total proceeds? In what way? Will it be expansion? Will it be setting up any new factories?
Yeah, the primary objective of the IPO is to repay the debt which is in the books, and the balance money will be used for growth, working capital.
So, any plans of
Can I just add? So, if you see the object of the issue, one is repayment of the debt, and the balance is for general corporate purposes. So, we will see what we want to do with the balance. There are some plans we have, but the primary object is to retire the debt.
So, any expansion plans which you would like to mention?
I think it's all part of the growth strategy which Alok talked about already. So at this point of time, we can't be sharing those details with you, but we have a lot of plans which will fuel the growth of the company.
And post the IPO, what will be the promoter's shareholding?
It will be about 80%, 81%.
Okay, great. Also, since we have discussed a lot about distributorship and your advantage in that, are you looking at, also you just mentioned that you are looking at partnerships with other foreign brands as well. So are you looking at bottling as well those brands and distributing them?
We are open to both bringing them as BIO, which is bottle in origin, and wherever there is a merit to be able to bottle it locally. So we're looking at both.
Great. And also, would you like to share some thoughts on marketing strategy? Are you also looking at having some brand ambassador sometime in the future, or how, or digital marketing, movies, in movies, something like that?
My marketing officer will not be very happy if I share his brand plan. So I think for now we'll just leave it at that.
That's okay. It's just for the confidence of the readers of in
You've given, I think,
going
some
for the
interesting
share.
ideas for the team. So thank you.
Great. Your share value, face value is 2 rupees, and you're promoting at 281 rupees. So could you give a thought process on how did you arrive at that figure and how reasonable that is?
Like EV to EBITDA, if you look at an EV to EBITDA ratio, it's at about 32 to 34, with the price band of 267 to 281. And if you look at the trailing EV to EBITDA of our listed peers, they're north of 45. So I think we are well positioned, and actually we're offering a very good price.
Thank you.
CSR initiative for us is largely focused around community, which is in and around our manufacturing unit. And as you know, that each community has a unique requirement. It could be water, it could be electricity, it could be some infrastructure for the school there. So we do not have a program. I essentially understand the unique need of each community and then participate there. So that's really what happens. But very, very focused on communities around our manufacturing units.
Light on the overseas partnerships.
Overseas partnerships as in brands that we so as we are yet to announce one, but there is significant interest, and the discussions are at a stage where we believe that we can bring at least a couple of them to the Indian subcontinent over the next few quarters. Thank you.
So there are a few questions from the online attendees. There's a question on why your revenue growth has been slow. We've not been able to catch up to a pre-COVID scenario. What are the challenges that we faced? And the following question is, why is your net margin below 1%? Most of your peers are between 6 to 11% net margin.
We'll address this question jointly. But I think if you need to look at this in context of whoever, could you tell us who asked the question?
Gitanjali Kedia from SP Tulsian.
Oh, so Gitanjali, thank you for the question. I think the answer to that is as follows. Actually, if you look at our business over the last 3-4 years, COVID, to be honest, has had a significantly more impact on our business than some of our peers. And one of the key reasons for that has been the brand portfolio we had at that point of time. More than 80% of our business was Officer's Choice. And during COVID, all the retails were closed. And it's the more premium brands which were still able to sell because there was more in-home consumption, etc. So it took us a little more time to recover from COVID than other businesses. So that's point number one. And actually, if you look at the brands that you see on display here, a lot of these brands like Iconic, which we're talking about with great pride now, Srishti, XNO, all these brands have been conceived and delivered post-COVID. I think we started working on them sometime towards end of 2021, beginning of 22. And they've been in the market right from end of 22 to beginning of 23. So I think apart from the fact that we are the only company which has rapidly got 4 millionaire brands, also the company which has been able to very quickly address the issues in the market and address the gap that our portfolio had. And so the plans that we have going forward, Alok has already briefly, to the extent possible, shared with you. The other challenge that has been common to the industry has been the really severe increases in raw material. And I think we were discussing it informally with some of you, is that if you look at glass price, and glass is an integral part of our business, Glass price from about August of 2021 till almost July, August 22, the glass price went up by 60% from an average of 22,000 rupees a ton to almost 33 to 35,000 rupees a ton. It moderated a little bit in April 23 on the back of government's gas pricing, but it's still at about 32,000 rupees a ton. So it's almost a 60% increase over what it was. And extra neutral alcohol, which is another significant cost, which is ENA, those prices went up by almost 30% in the same time frame, from about 50 rupees a liter to about 65 rupees a liter, and 4 liters of ENA going to every case. So, and thirdly, we have significantly more debt on our books, working capital debt, which again, as Ramke has explained, we have about 800 crores of debt, and there is an interest servicing around it, and a few other non-debt interest-bearing elements that we have on our books. All I can say is that at this point of time is that between 2021 to now, mid of 24, we have successfully reset the brand portfolio, and we have some very exciting plans which the management team is taking forward. We have successfully, at this point of time, addressed the severe cost push on glass by converting Officer's Choice to primarily PET, which was not an easy decision, as you can understand. But I'm very proud to say that ABD as a company has been successful in implementing that. And now we're at a phase that we have been able to address costs that we could without recapitalization of the business. We have been able to address the brand portfolio, which could be done before we could recapitalize the business. And some of the plans going forward in terms of backward integration, in terms of further plans, which I request Alok to briefly talk about to the extent possible, will address the balance. You will find that, with answer to your question, our margins will get to our objective, is to get to the peer level margins over 24 months.
Yeah, and thanks, Shekhar. Thank you, Shekhar. I think just to sort of sum it up, he's covered everything well. I think the idea is to, on back of a new product portfolio, is to drive gross margins expansion, revenue growth in profitable market that puts significant more operating cash on the table. Post IPO flow into a better margin profile.
Sure. Majority of the questions coming in are actually with respect to how the bottom line is going to improve. But can you give an indication of what the impact can be after you retire the 720 crore debt?
Can't give you a number, but the interest reduction on retiring 800 crores of debt will be significant reduction on the interest. So I will just leave it at that for now.
Sure. There's a question with respect to the valuation. I'll leave that to the bankers to attend to.
But I can only re-emphasize that yes, I think the multiples that he shared on a EV/EBITDA basis on the 31st December balance sheet that we have disclosed works out to 34 at the higher end of the price band. And if you compare it to the industry peers, for a like-to-like comparison, those numbers are much higher. It's 40, 42 and 45, which is again mentioned in the RHP. So you can understand that there is a significant discount to the peer set, and that's the money that we want to leave it on the table for the investors and the retail investors especially, and we want to make the issue attractive for all. So that's the logic for pricing it. And pricing has also been arrived from the book build process that we have arrived at. There is a feedback from the investors whom we met, and they have given a price range which has been accepted and used as the basis for pricing the issue.
Thank you. One more question, sir. From public reports available, the drinks report which has come out recently identifies that Iconic is growing the fastest in the world. When can you come up with another brand like Iconic, in your Prem brands category?
Now, well, hopefully soon. Brands have a pleasant way of surprising us and shocking us. So we are only hoping that the quality of work that's happening on the brands that we're looking on premium and luxury side, hopefully we'll have a winner soon.
Thank you. No further questions from the online attendees.
Hello. Yeah, this is Mayank here from ITI Capital. I'm just here for the vote of thanks. Good afternoon, everyone. On behalf of all the book running lead managers and the entire Allied Blenders and Distillers team, I would like to extend our heartfelt wishes for your presence and the participation in today's press meet. This is a significant milestone for the company, and we are genuinely grateful for your support here today. As we embark on this journey, on behalf of the ITI Capital team, I would like to congratulate the management and wish continued success going forward. To just recap a few details on the issue, which I think Ashwini already mentioned in the beginning. This would be a 1500 crore total issue size with a fresh issue of up to 1000 crores on an offer for sale for 500 crores. The price band for the issue has been set at 267 at the lower end and 281 at the higher end. The indicative dates for the issue would be 24th of June, that is Monday for the anchor, and the issue will be open from 25th to 27th. And we expect the commencement of trading to be in and about 2nd of July. In all, I would just like to, thank everyone again. And in closing, I would just say, let's raise a toast to the continued success of Allied Blenders and Distillers.